Today, we're going to take a closer look at three different semiconductor sectors and some updates impacting the overall market. I mean, we can see Nvidia is up 3% on the day after reporting earnings yesterday, but there are some things that I think investors should kind of consider. We also do have some recent earnings that you don't want to miss. So let's take a closer look in today's episode. All right, so first let's start off with Nvidia. The stock right now finished today at $139. It was up 3% after earnings. I've shared my overall thoughts on earnings, so make sure to follow that on my previous videos. And we can see after hours, unfortunately, the market is down about 1%. There's a lot of flip and flopping happening here in the market right now, and we'll talk a little bit about that later on. But right now, most of the after hour movement is more macroeconomic concerns and overall concerns of just the whole world opposed to an individual company thing. So I'm not too worried about that. Now, I'm going to start off with some financial upcoming events for Nvidia that I think we're all going to want to keep a closer eye on. On June 4th, on Wednesday, they do have a Bank of America Security Global Technology Conference. We'll definitely cover that here. On June 10th, we have a NASDAQ investor conference with Jefferies. And on June 10th, we also have kind of a technology summit in the age of AI. So here I'm going to be looking at these conferences and events because these are going to be the opportunities for us to get a little bit more answers on certain niche questions, maybe a lot more information on things like the GB300 Ultra, more information on the NVL Link Fusion, any more kind of updates with any new AI factories that are coming out. So if you want to stay tuned, make sure to check out and make sure to subscribe to the channel, right? That's going to be the best way you're going to get some form of information. Now, next, what I want to look at is Wolf Research analyst Chris Caso correctly points out that Nvidia's Q1 2026 earnings report kind of addressed all of the investors' concerns, which I do believe were true, right? It did include rack production with the Blackwell platform. That seems to be completely fixed, and we have the Grace Blackwell Ultra coming out later this quarter. We have the China now, unfortunately, is out of the questions and hands of Nvidia, and we also kind of got the answer of the AI diffusion. Now, Caso is actually very bullish in the long term of things, it seems, because he mentions that we think the consensus views had been to own this stock. We think the consensus view had been to own this stock for the second half and calendar year of 2026. But the concerns heading into the report caused some to wait out this report. With the concerns now addressed, the stock up and bullish outlook for second half, we think the pain trade for Nvidia is higher. So overall, what this analyst is saying that before earnings, we had a lot of questions, or more typical investors had more questions about Nvidia and the future potential of it, but a lot was answered during this earnings call, and that overall can create a great sentiment for investors to buy back into this stock. And I agree. I mean, I think earnings were great, and it did answer, and it kind of gave us that long-term tailwind. Now, following here with Nvidia, there are reports that Nvidia's Jensen did a Bloomberg interview. And in that interview, he actually talked about Huawei's technology, which is that Chinese AI player. He mentions that Huawei's technology, based on their best understanding at the moment, is probably comparable to an H200. That's actually pretty strong because not many US companies are actually comparable to the H200 just yet. But Jensen says that the Huawei technology is. Not only that, they mentioned that they also offer this new system called Cloud Matrix, which scales up to even a larger system than our latest generation, the Grace Blackwell. Huawei, as you know it, is a formidable technology company, and they're not standing still. So I think a little bit of two things is happening. First, Nvidia has to make sure that they showcase that the Chinese market has this competition and that it makes the best interest for the United States government to allow US to ship their chips to China, because then this is going to create some form of divide between Chinese-based players and is going to give some money to US technology, right? So what's the point of having these halts and these export restrictions if there's already a competitor? So I think that's the first thing. But I think there is some truth. There are some reports that I follow that do mention that Huawei is actually somewhat competitive in a lot of different aspects. And Jensen, during that interview, also talks about kind of like the developer system. If you're pushing NVIDIA usage out of that big big country that has a lot of developers, and you're pushing them all to Huawei, that's also going to create a negative sentiment in the long term of things. So I don't think Jensen is scared of this, but he is not a big fan of these export restrictions, and he does see Huawei as a formidable threat. I think to them, this is the biggest threat that they face right now. Again, I'm not worried, but in forms of tier levels, I would put this one, Huawei, on top over some of the other players. Now, we are going to see that, and there are reports that Nvidia and AMD may soon start selling new AI chips in China to comply with the US restrictions. This is coming out. We heard from Jensen during the earnings call that there are looking at options, but nothing to announce just yet. So here, if they do have something like this, interesting, they're going to be able to get some revenue back in China if that happens, but I don't think it's going to be all the revenue that they lost. Now, we're going to jump into Marvell Technology. So Marvell Technologies reported earnings today, and the stock, unfortunately, is down about 3.2% after hours, after being 1.3%. Now, I believe it's a mixture of two things. First, earnings weren't I thought earnings weren't bad. I actually didn't get too much worried about earnings, and I'm actually a little bit more bullish of Marvell Technology. But the stock is down a little bit after hours. But I think it's back to prices that we saw just about a week ago. So now we're jumping into finchat.io, and make sure to check out my special offer at finchat.io/Jose. The link should be above here for some great products. But they already have some metrics. And again, if you go Marvell Technologies, just click financials, and you will be able to see kind of custom metrics or kind of their KPIs already. Here we're looking at the data, a lot of revenue segments. So we can see the first is data center revenue, and then it's all the other revenue segments that Marvell has. Now, the first thing we can see is that data center revenue continues to grow up on a sequential basis. So that's really good for Marvell. Now, all its other markets pretty much seem a bit flat or are down about, some are up a little, some are down a nice amount. So those core markets for Marvell are all still pretty volatile. It seems like there might have been already a bottom in a lot of them, but a lot of them are still kind of at least trending through those stretches just yet. So what I'm saying is, in the long term, I believe these opportunities can be a tailwind for Marvell as these start to grow. And at the same time, I do believe the data center market will also continue to be another tailwind for Marvell Technologies. Now, if we do kind of go, Marvell does here in finchat.io, if you go to Marvell Investor Relations, you can kind of already get the transcript of the most recent earnings and also get some cool AI generated answers if you ask some questions here for Marvell Technology. I am going to highlight some of the important information that I found. First, I actually want to talk about Nvidia here. So we do know that Nvidia just announced the NVLink Fusion, which is actually big for ASIC players. And the CEO of Marvell mentions that they are happy to be asked to participate in this market by Nvidia, and they've already received a whole bunch of interest from customers on what this engagement might look like. So there are already talks happening with NVLink Fusion. At least customers are curious with it and how it can be integrated into their platform. Now, some other things, the data center revenue is up 76% year over year and now accounts for 76% of the company's total revenue. When it came to the ASIC market, they mentioned that they have large programs with large US hyperscale consumers with multi-year, multi-generational engagement expected to drive revenue growth through fiscal 2027 and beyond. So remember, this is their quarter one of 2026. So they mentioned they can grow dramatically for the next few years. They also mentioned that they are already getting traction for both current and next generation architectures, including secured 3 nanometer wafer and packaging capacity for future production cycles. So they are saying that, look, we're getting some great tractions, not only for our current generations, but also for future generation. Now, one of the big questions is the Amazon market. Is Amazon going to be switching off their Trainium to another player? And the CEO didn't really say much about that. They just mentioned they had great partnership with Amazon, but he does clarify that due to high volume and diverse customer needs, it is possible and and likely that customers may be pursuing multiple paths. And sometimes this is the case. I mean, Google TPU, for example, they have a TPU, and there are reports that one of the efficiency versions of the TPU might go to MediaTek, while the performance might stay with Broadcom. And I believe maybe that could be the case here with some of Amazon's solution. Now, one final thing here from the earnings, Matthew Murphy mentioned that this momentum reinforces their confidence in achieving their long-term goals for custom revenue. They will be highlighting their broad and expanding range of opportunities at their custom AI investor event on June 17th, and he will share more details about that event later during the earnings call. So again, if you want some pretty cool charts, make sure to check out finchat.io. You can get everything from transcripts, from presentations, and the list goes on and on. Now, the next topic I want to take a closer look at here is Cadence Design System and Snopsys. So this is something we actually talked about yesterday, but the stocks are down a nice amount in just the past 5 days. In the past 5 days, Cadence is down nearly 10%. Synopsys is down about 9% on pretty much both is similar. So if we look here at finchat.io and you kind of put the company, you go to filings real quick, you can kind of see all the SEC filings. And the most recent for both came out today on May 29th. First, let's look at Synopsys. Synopsys mentioned that they did receive a letter from the US government kind of saying that they can't, that they need new export restrictions related to China, and they're unable to kind of send some of their products to China right now. Synopsys is currently assessing the potential impact of this letter on its business, operating results, and financial conditions. And at the moment, it has suspended its financial guidance for the third quarter of fiscal year of 2025 and for the full fiscal year. Now, Cadence is pretty similar. They mentioned that the new requirements are complex, and they are engaging with the Bureau of Industry and Security, the BIS, to obtain further clarification as we assess the impact on our business and financial results. So both of these came out almost after hours. I want to say most of the market was already expecting this. That's why we did see a lot of the negative sentiments happening last night when I did the video, when we had those reports coming in. But now it does seem like it is confirmed there. Now, what I want to kind of jump into next and the final topic is just the overall market. So there is a big flip-flopping happening with the tariffs. So on Wednesday, their night, Court of International Trades halted the majority of President Donald Trump's tariffs before granting a stay on Thursday afternoon and allowing the duties to remain in place until next week. So there's a lot of flip and flopping happening here. We don't know what's happening. So obviously yesterday when we heard that they were halted, we saw kind of bullish sentiment. Now when we heard that they're not halted, there's more of a negative pressure. And I think this volatility is going to continue and continue. Outside of that, there are also reports that US and China talks have a bit stalled right now, and the big leaders need to weigh in before anything else progresses. Now, again, I don't think that's necessarily bearish, but the market wants things to happen a little bit faster, and just hearing stuff like that could create some negative sentiment. So in forms of Nvidia, great earnings. In forms of Marvell's, I think Marvell was actually great earnings. This is one that I am going to be looking to add on to these levels in the 61s. I think long-term potential is actually pretty strong. Obviously, there is risk. And with Cadence and Synopsys, I think this could be an opportunity if one is looking for a more mature software play, high free cash flow margins, maybe not the crazy growth story, but getting into these places. These companies have done really amazing over the years. We can see in the past 5 years, Cadence is up 211%. Let's look at Synopsys. Synopsys, a lot lower than that, 151%. But both these players, I believe, have done really well in the long term of things and have a really great business model. So while I'm not purchasing, I could definitely see why some would want to take this opportunity to add this company or add on to their shares. So I hope you guys enjoyed today's episode. Take care, have a good day, and make sure to hit the thumbs up and subscribe button.